Guys, so looking at what's going on here, we're actually in the bullish market. So, but remember last week I told us why I skipped this guy, why this guy should have been skipped, and then we had to use this key level here because there's a fair value gap here immediately after this, immediately before this one. So price would rather go for this one because it's still open, it's unmitigated, right? And price respected this, even though we were bearish, but seeing how price was going, we knew that price was definitely going to drop before it start moving, right? But knowing when to stop is important, okay? Because if we look, discover that price was bullish, and this is another key level that price respected, though I couldn't cash from here, all right? So that is it. Then if we look at it now from the weekly time frame, because you must analyze from a higher time frame perspective, okay, you discover what's happening with price. Discover that we have your typical sweep, all right, your break, and then your engineered liquidity, all right, or inducement. So this is a typical SBI on a weekly time frame, which means price would most likely respect this zone, all right, which means price will most likely respect that zone. Okay, so that is it. That's for that. Yeah. Uh, so we see where price is currently going, and then we have a fair value gap there. We have a fair value gap, all right, from here to here, which is like where we should be targeting. Okay, definitely above this current zone. So now, how do you make entry on this? On the daily time frame, you can check daily time frame as well to see it clear. So you see where the fair value gap started actually. See where the fair value gap started from. So you know how to target. Look at it there. So some people might still want to target to this point, but while it's okay, sometimes price might want to make a deeper retracement before it continues. So you target your nearest zones, or you just do your 1 to 3. All right, that's it. So on the 4-hour time frame, what can we see? You can see that price currently going up, and we currently tested a key zone here, right? Currently tested a key zone here, of which I also took that trade, all right? So we can see, so I actually executed this, all right? I just had my pending order and went to sleep and woke up, you had already triggered, and that's it. Okay, so now what next? We've already missed this one. Go to your lower time frame, you can see, all right, something on the 1-hour time frame. What I've already seen is that after price fulfill this key level zone, created a good fair value gap, and price will most likely drop into that fair value gap to keep moving. So that's what I've identified. So once price drop into this fair value gap, depending on how it is, I can, find my entry. I might find my entry and, join it to the upside. All right. Because it's just a fair value gap. So um I'm not having any pending order yet, managing risk. But there's nothing wrong putting because of because of um because of mitigation that have occurred, and because of what is it I wanted to say, because of order flow, you can see this guy created and this guy filled it. So if you are to enter, you can take 50% of this survival gap on 1 hour, and your stop loss can be just here. All right, this is your invalidation zone. Okay, so that's it. I can target 1 2 3. But then again, Remember I talked about taking trade from where we've not had order flow, right? You can see, you see this particular key level, you see how I took it here. But you know, notice we have fair value gap here, all right? We also have another place. So where should I have looked at? I should have looked at this place. I should have looked at this zone because that's the last mitigation zone. But why did I not wait for this zone? All right, I didn't wait for this zone because price had not gone far away from, remember, well we're taught by Sabi, price, once price goes far away from this guy, it will not hold. It will most likely not hold, especially when there is another one here. All right, so price has not gone far from here. That's why this one was still very valid. Okay, the moment this price, for some reason, the moment this price moves to this point, all right, and then start coming back, just know that this will be your zone because it has gone far. And why would this be your zone? Because that's the last areas of mitigation where the order flow ended. So you will now have to mark, this zone. You now have to mark this zone, all right, and wait for price to continue to the upside. And during that time, you might even get sell opportunities, all right, to sell to this zone. Now, you are now knowing where to stop selling and then start looking for your upside movement. That's just it. All right. So price can start respecting the fair value gap and start dropping the downside. This other block, price will eventually get to it, but it might not get to it immediately. You might first of all want to dip to this point, continue again, market. So once you notice on your 4 hour time frame that this place has this zone, this fair value gap has switched, there's a change of character. So you start looking for your sales until you get to this particular zone again, change again, wait for price to start respecting this zone again because that's the last area of mitigation before you start moving up. All right, so that's exactly it. So yeah, like I already said, I would make a video on order flow, all right, so that when I'm explaining this thing, to be easy for everyone to understand. Take care of yourself, and make sure to stick with the trend. If you want to counter the trend, just like in this case, you have to be careful and know when to disappear. And mostly when you're countering the trend, try to always use break even. Once price has moved like 1 to 2 away from your entry, you can always put a break even because if you don't know where price will react from next, it might mess you up. All right, take care. God bless you.